Well, first up, despite widespread speculation that a credit bubble will burst in South Africa's unsecured lending market, one of the country's largest lenders posted strong results today for the year ended September. African Bank reported an 18% increase, and that in headline earnings per share and a 20% return on equity, begging the question whether the bubble has been grossly exaggerated. Joining us to tell us whether the sector is out of the woods or not is Stephen Menchie's from Imara. Thanks so much for joining us. Is the sector out of the woods? Let's put that to you first.
To me, yes, I think that the listed companies have behaved very well. They've been very cautious and able to come out with good results. And I think that the latest data from the Credit Bureau, according to management at today's presentation, shows that everybody in the game is slowing down. So I think that there's certainly no longer a pell-mell rush into lending.
Stephen, a lot of the talk and the speculation, especially post-Marikana, was that we were seeing a bubble, and we saw Leon speak today about a lot of credit coming into the market. Whereabouts are they seeing this influx of credit, and are we out of the woods yet? I mean, this is a company that's just posted 20% or 18% increase in headline earnings. It doesn't look like a company that's under any sort of duress. So where does it leave Able, and then where does it leave the rest of the market?
Well, I think where it leaves Able is one looks at the very last slide that he showed, and if you look at Advance's growth, he's looking at 23% for the coming year, as opposed to, I think it was 33% for the year just ended. So that's obviously, it's a slowdown, but it's pretty healthy.
But there must be a risk to the overall consumer. What are those overriding risks, red flags in your opinion, that could see a re-rating to the downside on a stock like Able? It
has already been re-rated. I think the journalists and the media have been understandably extremely worried about it. Everybody's been worried, and Leon said today that he thinks all the noise has actually served quite a useful purpose. It's given everyone a wake-up call, and everybody's been cautious. And but it's just that if you look at the bad debts relative to what they were planning and their parameters, it's absolutely spot on. There has been nothing out of untoward in their experience. So as far as they're concerned, their caution has paid off.
Stephen, we know African Bank have been in this game a long time, and they've got some of the most sophisticated systems in terms of being able to understand what the different segments of their clients are earning, how they're coping with servicing debt, the kind of debt levels that they carry. If African Bank's the sort of leader in that, are you worried about other players in the market, especially some of the large retail banks that have been quite aggressive in growing their loan book recently and may not have the same sophisticated systems and advanced knowledge and detailed knowledge around their consumers as African Bank does? Is it something that you look for in the results of the banks coming forward?
Well, it's going to be very interesting to see. Of course, they say, for example, Standard Bank, they say a lot of the unsecured lending is simply to existing clients on overdraft. They've had these clients for ages, and they know exactly what they're up to and what they're doing, and they don't seem to be worried at all. So it will be very interesting to see if their experience is worse than the real specialists like Able and Capitec.
So just to put you on the block, I mean, we now see African Bank, their share price has dropped from 40 Rand to about 30 Rand over the course of the last 6 months. You've seen the results today. They're paying a dividend yield equivalent to about 6.5%. Is it something you're going to start adding to your clients' portfolios at this point, or are you going to wait and see?
No, absolutely. No, I think you can sound the all clear on this one.
Can you add aggressively? Let's push you even further.
Yes.
So you're quite happy to take on that more risk on African Bank at this point?
Yes, I do, because I think that as Leon Kirkin said today, it's a cyclical business. They've seen this movie many times, and I think they've shown that they know what they're doing.
Let's move on to the steel environment and the value chain in that territory. Stephen, can you first of all just unpack it for us? You've got the likes of ArcelorMittal, Evraz and Kumba. How does the chain unfold?
Well, certainly the steel prices don't seem to be going anywhere in a hurry. They might be stabilizing, and they might pick up a little bit. So we have had some confident forecasts out of China. Their steel consumption likely to grow, and there are signs the economy is at last going to grow a little bit faster. The iron ore price seems to have stabilized around about the sort of $120 a ton level, which is quite good news for the iron ore producers. And then if you come to our local steel producers, well, in particular ArcelorMittal, the process of mediation and arbitration and, you know, where are they with the old cost plus contract with Kumba, that's going to take some time to resolve.
Longer than it's already taken.
Oh, yes. Well, yes, it looks like a long-term thing. It will be significant for them if that is reinstated. It'll be quite much more significant than positively for them than negatively for Kumba.
What do you do with ArcelorMittal at 28 Rand?
Avoid it.
Avoid it.
At this level still.
One has to say that it's on a price to book of somewhere around about 0.5. There is value there. But I think you can afford to wait a little bit before you venture forth.
Just to push you on that, Stephen, I mean, it's trading at levels that these are some of the cheapest levels I think the stock has ever traded at. Not great for steel producing at the moment, but lots of people saying that the recovery in China, the landing in China is going to be a soft landing, and they're still going to sustain good economic growth going forward, which is positive for the steel market. You've got iron ore on the other hand that's very cheap at this point relative to where it's been. Surely ArcelorMittal on a 5-year view is worthwhile including in a portfolio.
I have to say on a five-year view you could certainly think about it, yes. However, steel prices globally, I would prefer to wait and see them lifting off the bottom. I'd prefer to see, bear in mind ArcelorMittal depends a lot on the local economy, and I don't see that roaring ahead next year either. So it's going to be a slow, long haul for them.
Do they need a change in management, ArcelorMittal?
I don't think anyone could have faced all the bad news and bad press they've had as, how should we say, jovially and amiably as the present CEO. I think she's done a magnificent job in taking all the flack. Where have they failed management-wise? I don't know. I think they've just been on an incredibly difficult wicket. They seem to have, but look, she's been there a long time. Maybe it's time for a change.
You've mentioned off air that the larger Mittal Group, ArcelorMittal Group, had been selling or disposing or closing some of the steel factories in Belgium, I think you mentioned. Yes. Is the local division actually making money at this level? Because we've seen them, we've seen them now talk about exiting their stake in the Kalahari manganese project. Do you think they're a company that's actually looking for capital, looking for cash at this point?
If I'm not mistaken, it is actually the parent company that's sold in that manganese project. But in any case, they're EBITDA-wise, this last quarter was positive. The headline earnings have been pretty horrendous the last couple of quarters, and a year ago they made a big loss. Look, they will turn around at some stage. But as I say, the global steel prices, I think you want to see them actually decidedly lifting off the bottom first. And you want to see the local economy. And whilst the general forecast for next year is maybe a little bit better than this year, but nothing very exciting for the local steel consumption.
In terms of another steel producer and vanadium producer, Evraz posted results that were quite negative. There was an 800 million rand loss for the first half of the year.
Yes.
Is it just a cyclical, is it just something that's, you know, these steel companies are cyclical and they're all going through the worst of the worst now along with construction? Do you see any value in Evraz at this point?
Once again, I think you can wait. Perhaps a bit longer than in the case of ArcelorMittal. I mean, they talked about a strike. They talk about that they're going to reduce costs and increase efficiencies. So, but otherwise, you know, the same considerations apply.
And I suppose the same considerations apply to Kumba Iron Ore. Let's complete the cycle on this one, or does that stock hold separately?
Well, they of course are increasing their production at quite a great rate, and they will benefit if there's a bit of a lift in the iron ore price, and that might happen before the steel price lifts, although because the dynamics are slightly different. Yes, you do need to see steel consumption picking up, and it's the consumption picking up that's going to benefit the iron ore, you know, the seaborne iron ore trade. So Kumba at present levels, with the increase in production that's planned for this year, I'd say is a much better bet than the two local steel companies.
In terms of Kumba, it's obviously one aspect of it's a great asset in the South African context. We're seeing a lot of supply coming on for iron ore in West Africa as well as Western Australia. I had one fund manager telling me that the iron ore market today is like the hotel industry was in South Africa before the 2010 World Cup. Lots of supply coming along and not that much demand in the medium term. What's your thoughts about just iron ore generally at this point? Are you worried about the supply that's coming, seems to be coming en masse from different parts of the world?
Look, I think it's a concern. I think you've got to watch it very carefully. But of course, that was a real shocker, the dive that the price took down to below around about $90 a few months ago. And quite a lot of projects have been pulled. You saw Vale is not going to proceed with its interest in Simandou, you know, this huge project in Guinea. And for that matter, I don't know that, I think it's going to be quite a long time before Rio, which has got a big share there as well, big property there, I should say. I think it'll be quite a long time before that eventuates, say at least 5 years or so. And I think you're going to find delays. So I know that some forecasters are forecasting long range below $100, but I think it does remain to be seen.
And what is going to happen to Anglo-American post the Glencore Xstrata merger?
Well, very exciting, very interesting. I think they've got, internally they'll have quite a lot of settling down to do, so I don't think they're going to fire off all broadside Anglo as the new management walks in.
As tempting as it may be.
Yes, yes.
I mean, we saw John Parker, the chairman, almost write off Mick Davis as a candidate before, you know, it looked like they'd even given thought to it. Would they be worried, you know, with the sort of involvement with Mick Davis has had with Glencore, that if he became the CEO, you know, there'd be a push to try and do a mega deal that would involve the three companies?
You mean if he became CEO of which company?
Of Anglo-American.
Of Anglo-American.
And then obviously if this deal goes ahead tomorrow, we see Glencore and Xstrata merging, and Mick Davis is then out of a job.
Yes.
Assuming he became the CEO of Anglo-American, do you think there'd be a push to consolidate all three companies?
Well, I would imagine if he's chosen by the present Anglo-American board to head up, to be their CEO, it will be with the opposite intent, actually. I don't think the board wants to see Anglo being taken over by Glencore Xstrata.
So tell me, Stephen, what are you doing with Anglo-American at 240 Rand?
But again, the value there, I think there's a clear case for value. But once again, the sentiment is so negative, and the the platinum side is so unsettled. We just had the news of 20% loss, drop in profits. That again, you've got time, but the value's there, and they will recover.
So at this stage, does that mean you're a buyer in Anglo-American, or?
Look, I think you could buy some if you don't have any. If you've got some, well, you can wait a bit before you add again.